In the financial world, we've got this one indicator that's, well, it's less about numbers and way more about feelings. And right now, it is flashing bright red, and it's telling us something absolutely fascinating about what's going on inside the collective mind of the market. So, is the stock market emotional? It's a fantastic question, right? Because we're taught to think of markets as these cold, calculating machines. But what if? What if they're actually more like a moody teenager? Grasping that idea is pretty much central to figuring out what's going on.
And this is the tool for the job. It's called the Fear and Greed Index. Look, just forget all the complex algorithms for a second. The easiest way to think about this is like it's the market's own collective mood ring. The kind that tells you if it's feeling happy and greedy or kind of down and fearful.
Okay, and this is the absolute key. The real engine driving the market, it isn't just earnings reports and spreadsheets. Nope. It's the chaotic, kind of predictable, and let's be honest, often very expensive, emotional roller coaster that millions and millions of us are all riding together. All right, so let's pop the hood on this thing. What is this market mood ring actually measuring? Let's dive in. So this thing isn't just, pulling a feeling out of thin air. It's actually looking at a bunch of different factors. It's watching market momentum, how much trading is actually happening, the volume. It's checking volatility, and this one's my favorite. It's even looking at social media sentiment. It's basically got its ear to the ground, listening to the market's heartbeat and all the chatter. And all of that, well, it brings us to what's happening right now. Today's reading, the needle is pointing, and I mean firmly pointing, toward one emotional extreme, and that extreme is fear.
And we're not talking about a little bit of caution here. Oh no. A reading like this suggests that pretty much the entire global investment community is huddled together under one giant fear blanket. It's a classic sign of widespread capitulation.
So what does that actually look like? Well, it looks like a frantic dash for safety. People aren't just being careful. They are actively dumping assets, selling things off. And not because the companies behind them have suddenly failed, but simply because everyone else is selling. It's pure herd mentality. And that is the key. In a phase like this, you can just take your logical, rational analysis and toss it right out the nearest window. Decisions stop being about the numbers and start being emotional, reactionary, all fueled by the panic of the crowd. I absolutely love this metaphor because it just nails the feeling, doesn't it? One minute, investors are looking at their portfolios like they're sturdy, beautiful yachts. The next, all they can see are these small, leaky dinghies about to get absolutely swamped by a hurricane. That's the power of collective fear right there. So why does this keep happening? Well, there's this old joke in finance that the market has the memory of a goldfish and the emotional maturity of a toddler. I mean, think about it. One scary headline, one little dip, and suddenly it triggers this massive, outsized dread, and everyone just completely forgets all the context. Okay, but fear is only half the story. It's just one side of the coin. To really get what this index is all about, we have to look at its polar opposite. And trust me, it's equally, if not more, dangerous. And this just lays it out so perfectly. Fear is selling because everybody else is. Greed is buying because everybody else is. See, they look like total opposites, but really they're just two different flavors of the exact same thing: herd behavior. Now, when that index swings all the way over to extreme greed, oh man, the atmosphere is completely different. You've got investors just piling into assets, totally convinced that this time is different. It's like they believe gravity itself has been repealed for the stock market, and that old-fashioned things like valuations, well, those are just a myth. And as one writer put it so humorously, but also so accurately, this stage of maximum euphoria is pretty much always the stage right before an inevitable and often humiliating financial spanking. Yeah, the party, it turns out, always comes to an end. Okay, so if both extremes are just dangerous herd behavior, you're probably asking, how on earth is this index useful? Well, this is where we get to the big aha moment. This is the contrarian's secret. The secret isn't to follow the crowd. It's to use the index as a perfect counter indicator. Think of it like a brilliant two-sided mirror. It shows you exactly what the emotional, often irrational crowd is up to, which, hey, might just be your signal to do the exact opposite. It's actually pretty simple. Here's the playbook. When the index is screaming maximum fear, like it is right now, that's your signal to be a little bit greedy. And on the flip side, when everyone's euphoric and the index hits maximum greed, that's your cue to be terrified, or at the very least, extremely cautious. And I gotta say, I love this analogy for it. Using the index this way is like stumbling across a vintage Rolls-Royce being sold for the price of a beat-up scooter. And why? Just because the current owner got irrationally spooked by a bad dream about its fuel economy. The real value is still there. It's just that fear has temporarily messed with the price tag.
All right, so we've kind of decoded the market's mood. But the most important takeaway here, it isn't actually about the market at all. It's about you.
Because here it is, the ultimate lesson, the real skill, the thing that separates the winners from the losers in the long run. It's not predicting the future. No one can do that. It's about mastering your own psychological reaction to the market's inevitable mood swings. It's an internal game, not an external one.
You know, for all the tech we have, all the fancy algorithms and endless data streams, at the end of the day, the single most volatile and unpredictable element in the market is, and always will be, the human brain. And our brains, well, they're just wired to choose panic over patience when things get uncertain.
So, I'll just leave you with this thought. The fear index is screaming that the market is having a massive mood swing. The crowd is officially panicking. So the only real question left is, knowing everything you know now, what are you going to do about it?